Day trading cryptocurrencies is a fascinating world. It's about buying and selling digital assets within the same trading day. The goal isn't long-term holding. Instead, traders aim to profit from small, short-term price movements. Think of it like a high-speed chess game played with digital money. Many see it as a new frontier, a digital gold rush where fortunes can potentially be made. This arena is not for the patient investor looking to park capital for years. It demands agility, quick thinking, and a constant watch on the ever-shifting market landscape. The appeal is undeniable for those seeking active engagement with their investments. The core nature of crypto day trading is intense. It's characterized by its high-octane, fast-paced environment. Markets operate 24/7, unlike traditional stock exchanges with fixed opening and closing bells. This means opportunities and risks are always present. Successful day traders must dedicate significant time to monitoring charts, news, and market sentiment. It requires a specific mindset, one that thrives under pressure and can make swift decisions. This isn't a passive hobby, it's an active pursuit. Volatility is the name of the game in cryptocurrency markets. This term refers to the rate at which the price of an asset increases or decreases for a given set of returns. In crypto, these price swings can be incredibly dramatic and rapid. For instance, Bitcoin, the original cryptocurrency, has seen monumental rises and severe downturns. This extreme price action is not unique to Bitcoin. Assets like Ethereum, Solana, and Chainlink also exhibit high volatility. This inherent volatility is truly a double-edged sword for the day trader. On one side, it presents the opportunity for significant profits. If a trader correctly anticipates a sharp upward movement and times their entry and exit well, they can achieve substantial returns in a very short period. However, the same volatility that enables quick profits can also lead to substantial financial losses just as swiftly. Understanding and respecting this risk is absolutely fundamental for anyone considering day trading. To navigate the crypto markets, day traders need a well-defined strategy. There isn't a single foolproof formula for success. What works for one trader might not work for another. Often the most successful individuals combine various approaches and adapt them to changing market conditions. Technical analysis, or TA, is a cornerstone for most crypto day traders. This involves studying historical price charts, identifying patterns, and using various technical indicators like moving averages, relative strength index, RSI, and MACD. Several specific short-term strategies are popular among crypto day traders, such as scalping and range trading. While day trading often emphasizes technicals, some fundamental research into the underlying project, its team, and its utility can also provide an edge. Section 4. Guarding your gains. The critical role of risk management. In the high-stakes game of crypto day trading, risk management isn't just important, it's everything. Your primary goal as a trader isn't just to make profits, it's to preserve your capital. Effective risk management is the bedrock upon which any sustainable trading career is built. One of the most fundamental tools in a day trader's risk management toolkit is the stop-loss order. This is an instruction placed with an exchange to automatically sell a cryptocurrency when it reaches a certain predetermined price. Beyond individual trades, managing risk involves careful position sizing and diversification. Position sizing refers to determining how much of your total trading capital you will risk on any single trade. Diversification means not putting all your funds into a single coin or type of project. Your mindset is as crucial as your market analysis. Section 5. Navigating the exchange maze. Choosing your crypto trading platform. Choosing the right cryptocurrency exchange is a critical first step for any aspiring day trader. This platform will be your primary interface with the market, the place where you execute trades, store some of your assets, and access trading tools. However, not all exchanges are created equal. They vary significantly in terms of security, fees, available assets, user experience, and regulatory compliance. The paramount consideration when selecting an exchange must be security. Look for exchanges that implement two-factor authentication, utilize cold storage for the majority of user funds, and ideally, offer some form of insurance for assets held on the platform. Next, carefully examine the exchange's fee structure and liquidity. Other important factors include the user interface, the range of supported cryptocurrencies, regulatory standing, and customer support. Platforms like Binance, Coinbase, Kraken, and Bybit are popular choices, each with its own strengths and weaknesses. Section 6. Avoiding the crypto quicksand, common mistakes, and final wisdom. The path to becoming a successful crypto day trader is often paved with a steep learning curve. Many enthusiastic newcomers, drawn by the promise of quick riches, unfortunately fall prey to a series of common and predictable mistakes. One of the most frequent errors is emotional trading, allowing fear of missing out or FOMO to drive you into chasing a rapidly rising coin, or letting fear, uncertainty, and doubt, or FUD, cause you to panic sell during a dip, are classic examples. Another common mistake is overtrading, making too many trades, often impulsively. Perhaps the most critical mistakes revolve around neglecting a solid trading plan and proper risk management. Trading without clearly defined entry and exit points for each trade is akin to gambling. In conclusion, day trading cryptocurrencies is an incredibly challenging endeavor, not a guaranteed path to instant wealth. If the high-stress, time-intensive nature of day trading doesn't align with your risk tolerance or lifestyle, consider alternatives like long-term investing, or exploring crypto ETFs for a less hands-on approach.